Banking systems are a crucial component of any modern economy. They provide financial services to individuals, businesses, and governments, including accepting deposits, providing loans, and facilitating payments. Banks make money by charging interest on loans, investing in financial markets, and charging fees for their services. Welcome to the Isle of Knowledge. Today we'll be taking a deep dive into the world of finance and banking, and asking the question, are we on the brink of another banking system collapse? With the 2008 financial crisis still fresh in our minds, many experts warn of potential risks that could lead to another collapse. In this video, we'll examine the current state of the banking system, explore potential triggers for collapse, and discuss the precautions being taken to prevent another crisis. Join us on this informative journey as we explore the predictions and precautions surrounding the possibility of another banking system collapse. The 2008 financial crisis was one of the most significant economic events of our time, a catastrophic event that shook the global financial system to its core. The crisis was triggered by a series of events that ultimately led to the collapse of the U.S. housing market, causing a ripple effect that spread throughout the world, leading to a widespread collapse of the banking system. In the years leading up to the crisis, the U.S. housing market experienced a rapid rise in home prices, fueled in part by subprime mortgages, which allowed people with poor credit to purchase homes they couldn't afford. As home prices continued to rise, these subprime mortgages were bundled together into complex financial instruments known as mortgage-backed securities, which were sold to investors around the world. However, as more and more people began to default on their mortgages, the value of these mortgage-backed securities plummeted, causing significant losses for investors and financial institutions alike. This triggered a domino effect, leading to the collapse of numerous banks and financial institutions, including Lehman Brothers, Bear Stearns, and AIG. The impact of the 2008 financial crisis was felt globally, with many countries facing significant economic challenges in the years that followed. The crisis led to widespread job losses, foreclosures, and a decline in consumer confidence, which in turn led to a slowdown in global economic growth. The banking system was particularly hard hit, with many institutions facing insolvency or needing government bailouts to survive. Overall, the 2008 financial crisis was a stark reminder of the fragility of the global financial system and the need for greater oversight and regulation to prevent similar events from occurring in the future. The global banking system has come a long way since the devastating financial crisis of 2008, but the question remains, are we on the brink of another collapse? Let's take a closer look at the current state of the banking system and explore some potential risks that could lead to another crisis. In the aftermath of the 2008 financial crisis, the global banking system underwent significant changes aimed at preventing a similar collapse from happening again. Banks were required to hold more capital reserves to better weather economic downturns, and regulations were put in place to limit risky lending practices. As a result, the banking system has become more resilient, with stronger balance sheets and greater liquidity. However, there are still potential risks that could lead to another crisis. One major concern is the rapid growth of fintech and digital currencies, which could pose a threat to traditional banks. Another risk is the potential for a housing market collapse, similar to what triggered the 2008 financial crisis. Some countries, such as Canada and Australia, have seen significant increases in home prices in recent years, raising concerns about a potential housing bubble. Geopolitical risks, such as trade wars and political instability, also pose a threat to the global banking system. These risks can lead to economic uncertainty, which can in turn cause banks to become more cautious in their lending practices, potentially leading to a credit crunch. A banking system can collapse when there is a significant loss of confidence in the system, or when a large number of banks fail at the same time. This can occur due to a variety of reasons, including economic, political, or social factors. The collapse of a banking system is a perilous event that can have dire consequences for the entire economy. One of the primary reasons for such a collapse is a financial crisis, which can manifest in several ways. One of the most common ways is through bank runs, where depositors lose confidence in the banking system and hastily withdraw their funds. If too many people do this at once, the banks may not have enough liquidity to fulfill their obligations, causing them to fail. Another way a financial crisis can lead to a banking system collapse is through asset devaluation. When the value of assets such as stocks, bonds, and real estate plummet during a crisis, banks that hold a significant amount of these assets may suffer significant losses. This can erode their capital base and make it difficult for them to keep operating. Interconnectedness can also be a factor in banking system collapse during a financial crisis. Banks are often linked through various financial markets, such as the interbank lending market. If one bank experiences a loss of confidence, it can quickly spread to other banks, potentially leading to a systemic collapse of the banking system. Lastly, a financial crisis can cause a loss of confidence in the wider economy, leading to a decline in consumer spending and investment. This can result in further decline in asset values and a loss of confidence in the banking system, causing a collapse. Banks are not taking any chances when it comes to preventing another banking system collapse. They have implemented a number of measures, such as improved risk management practices, better internal controls, and investments in new technologies. Banks identify potential risks and mitigate them by limiting their exposure to certain types of loans or investments. They also use rigorous stress testing programs to assess their ability to withstand economic shocks. Moreover, banks are using advanced data analytics and machine learning algorithms to identify potential risks and detect fraud. With these measures, banks are becoming more resilient and better able to withstand future challenges. Governments and regulators have taken notice of the potential dangers that could threaten the global banking system, and have put in place several measures to prevent another crisis. One of the key precautions has been to increase regulation and oversight of the banking industry, with new rules and regulations put in place to limit risky lending practices and ensure financial stability. Additionally, emergency measures such as injecting liquidity into the financial system have been implemented during times of crisis. Governments and regulatory bodies have also increased cooperation and coordination to promote economic growth and stability, with the Group of 20 and international regulatory bodies overseeing and coordinating efforts. These precautions have helped to increase stability and mitigate the risk of another crisis, but policymakers and regulators must remain vigilant to new risks as they emerge in the future. As we've explored the predictions and precautions surrounding the possibility of another banking system collapse, one question remains. What are your thoughts on the current state of the banking system and the measures being taken to prevent a collapse? Share your insights and opinions in the comments below.
Thank you for watching. Please consider subscribing, liking, and sharing, which means a lot to me. I love to see your thoughts in the comment section.